Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum, my final defense on the ETH going home thesis. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. The market is often a cruel place, and as we will learn, all of us throughout one point or another, it humbles us all. And on one day, I'm celebrating a multi-year thesis finally coming true, Bitcoin dominance hitting 60%. And then on the next, I'm wondering what's going on with the other thesis of ETH ever actually going home. So again, the market has a way of humbling us. And as I've said, and I said in that video, it makes sense to hedge. And I already have. I've already started actively betting against the idea that I present. And I said that in that video, and I, of course, told ITC Premium. And the reason for that is because over the last several years, I have said that I think the ETH Bitcoin bottom will be between 0.03 to 0.04. And 0.03 to 0.04 is where it is still right now. Now, in order to find an actual low and not just something that leads to another lower high, I would argue that ETH Bitcoin needs to get above its 50-day moving average. So this is a pretty strong move here by ETH back up, but it is still below the 50-day moving average. It is still below this level. My guess, at the very least, is you could see it sort of, come up into these levels and then get a pullback, and then we'll figure out if it's actually going to break through or not. If you go back and look at 2016 and 2019, you will notice that it did something very similar, right? Where once the actual bottom was in, it had a fairly aggressive move up back to where it previously was finding support, maybe a little bit above it, right? A little bit above it. But then it got a pullback and then went above the 50-day moving average. And then if you go look at 2016, what happened when ETH Bitcoin finally bottomed at the end of the year, it had a little bit of a move up, pullback, and then an aggressive move above the 50-day moving average. But you can see that it ultimately sort of rallied back up to a prior support level, got rejected, and then found support at the 50-day moving average. If you look at 2019, you'll see that it came down, rallied up, got rejected, and then above the 50-day moving average. But in both cases, once it was above the 50-day SMA, the low was in on a daily close, right? On a daily close, the low was in once the 50-day SMA was taken out. So that's the reason why I have already actively started hedging against my idea of ETH going home, because I value other ways to look at the market, and one of those is the ETH Bitcoin valuation. I think in a year, 0.03 to 0.04 will seem like a fairly attractive level. So I've already made some conversions already. Okay. But with that said, I do think the court of public opinion is a very important court to face. And as a financial analyst, we have to face the court of public opinion from time to time, especially when we put out bold theories. Some come true, some do not. And if I'm going to go and make videos where I celebrate the views that come right, such as Bitcoin dominance hitting 60%, I feel like it's my duty to also come on here and face the music when a theory doesn't actually pan out, and to just say, I'm human, I'm going to make mistakes. And that's kind of where I am, right? I laid out the theory for why I thought it would go home, and it certainly isn't looking great for that view right now, especially if you look at ETH back above 2,800. But with that said, in this video, I will just express my final defense for how it could still happen. Now, the reason I'm calling it my final defense on how it could still happen, although the odds seem somewhat stacked against the idea at this point, is because if it doesn't happen by the end of the year, then whenever it does happen, it would be foolish to, to say that it was a useful theory, right? I mean, if it takes, if ETH goes to new all-time highs before it goes home, then the idea of going home was never a good thesis to begin with, right? That I think that would probably make sense to everyone. Um, and so I recognize that time, of course, does play an important role in these predictions. I can't just hold on to it forever. And so for me, in this scenario, this is my final defense of it. And I will talk about areas where I think it would be confirmed that it's not going to happen, and I would completely pivot the view. Um, but I will also talk about basically the only thing at this point that I think would allow it to happen. So let's go ahead and talk about those things. So the first thing is an idea that I talked about a long time ago, and it's essentially, once the Fed starts cutting interest rates, um, it's certainly a tailwind for risk assets. Loose monetary policy makes people excited about riskier assets because those risky assets tend to do the best under looser monetary policy conditions. So, and Bitcoin did the same thing, right? Last cycle, it rallied after the first rate cut. But the one thing that I think about as it relates to some of these rate cuts is that the only way that I could see ETH going home at this point would be for the broader market to have a pullback. In 2016, when Bitcoin went up, ETH went down. And I've been pretty honest about it. I said I don't really think that's the most likely outcome, even though I can see it on the chart, right? I can see that it happened in 2016 where Bitcoin went up and ETH went down in Q4. It just doesn't seem like it's the most likely outcome this time. So in order for ETH to go home, the broader market would have to drop, right? Bitcoin would have to drop. And that seems like a tall order when now, I mean, everyone's screaming for 100K. And certainly with Bitcoin breaking out to new all-time highs, you can't necessarily blame them, right? When Bitcoin breaks to new all-time highs, when it gets in this cyclical phase of Q4, normally Bitcoin continues to go up for the rest of Q4, right? And you could just simply go look at that chart we've shown on here a million times, and that's the year-to-date ROI of ETH. Or sorry, not of ETH, of Bitcoin in halving years, right? You look at 2024, 2020, 2016, and 2012. Normally, once it gets moving in Q4, it just keeps on going up, right? And so the idea of fading that seems kind of ridiculous, right? Which is why I'm not, right? Which is why I'm not. I'm deferring to the cyclical view because it seems to be winning out. And so that's why, as much as I want ETH to go home, because I feel like it would be a good opportunity, as much as I think rationally, like that's what makes the most amount of sense, I have to start hedging against that idea, right? I have to say, like, I could be wrong. And that's why, in the video a few days ago about the Ethereum coming home video, I said, like, this is not a strategy to trade. This is something we've been following all year long. And if it does get the grand finale, we'll see one final drop by ETH in December of 2024. And then that will mark the end. And then Ethereum will actually finally be home. But as I said, it does make sense to hedge. But as I said on Twitter, or on X, I guess, saying that is, I understand why it's seen as a cop-out, right? I don't want to just sit here and say, well, yeah, it's my theory, but I said hedge. It's a bold call, right, for Ethereum to drop that low. And so while I am hedging and I do think it makes sense to hedge, I also stand, before the court of public opinion and will, of course, take on the wrath of those opinions. So the only way, right, the only way that it's going to happen is if the broader market drops, in my opinion, right? It doesn't seem likely at this point that ETH could go home if the broader market is not dropping. And so because of that, right, I started looking like, well, is there a case to be made that the broader market could drop? And again, doesn't really seem like the most likely outcome. And the reason I say that is because normally, new all-time highs normally, just continue to lead to new all-time highs for the S&P 500. And I think a lot of people have trouble buying highs, but normally when the S&P is putting in highs, it just keeps on putting in highs. And I know that goes against what a lot of people might intrinsically think about the S&P 500. But as I've said, like, the best strategy for it is just buy low expense ratio index funds and forget about it, because the market generally goes up. So to bet against the market is honestly a fool's errand. It is not something that I plan to do. And it's not something I really ever do, right? I never short the market or anything like that. But just, I think this video is more for me at this point, because this theory has been something I've been talking about for so long. And it's time to put a bow on it. It's either going to happen within the next 7 or 8 weeks, or it's not. And it's like, well, what could cause it to happen? Seems like if Bitcoin's going to go higher, ETH is going to go with it, right? There doesn't really seem like a scenario where Bitcoin goes to 100K in Q4 and ETH drops, right? Like, that seems like it would be somewhat absurd at this point, because it's the hand has been shown, right? Ethereum's rallying with Bitcoin, and so it doesn't make sense to assume that. So the only way it's going to happen is if the broader market drops. But then what's going to cause the broader market to drop? There is one idea. And again, it's not the most likely. I'm not trying to present these ideas as the most likely at this point. It's just I have to see this through for myself. What is one idea? One idea is that when the Fed cuts rates, it causes people to start buying riskier things, right? Like, so it causes people to venture out into riskier assets, right? So if they were just buying Bitcoin because they were following Bitcoin dominance or Bitcoin only until 60% dominance, now they're looking around and like, well, some of these alts look pretty cheap compared to Bitcoin, you know? These major moves by Bitcoin dominance have caused these altcoins to be grossly devalued against Bitcoin over the last 3 years. And so they look around and then they start putting some of their money towards those alts instead of towards Bitcoin. But the idea behind it is if sort of the floor of bids for Bitcoin slows down at all, which it doesn't really seem like it's doing that right now, because if you were to look at the where was it? The historical, or sorry, the spot Bitcoin ETFs, right? I mean, it doesn't really seem like it's slowing down, at least not in terms of spot ETFs. But my point is that if there's any way that it's slowing down, right? Like, if people start to buy altcoins instead of Bitcoin because they want to take on more risk, then it temporarily creates a window of weakness for Bitcoin. Not anything that Bitcoin can't overcome. I do think Bitcoin will go higher this market cycle, right? But it could create a temporary window of weakness where that bid for Bitcoin that's been there for 3 years because everyone was just buying Bitcoin until the dominance was at much higher levels, if that's gone and now people are diverting their funds elsewhere, then that could temporarily, remove the floor for Bitcoin and actually cause it to drop at the time when no one thinks it's possible for it to drop. And the reason is because everyone's out here now buying altcoins instead of Bitcoin. Something similar happened last cycle, right? I mean, whenever ETH Bitcoin bottoms, one thing to look at is what happened last cycle after ETH Bitcoin bottomed. And it bottomed in I believe it was September of 2019. And what happened when ETH Bitcoin bottomed is it got a really big rally, right? And when it rallied, Bitcoin also rallied too, right? So Bitcoin got this rally right here. Let me just, if I overlay Bitcoin onto the chart, right? I mean, it didn't lead to new all-time highs, but when ETH Bitcoin bottomed right here in September, you can see that Bitcoin rallied a little bit back up as well, right? But while ETH Bitcoin was falling, Bitcoin USD was going up. That's what's basically been happening recently, right? Bitcoin's been going absolutely parabolic, and ETH Bitcoin just keeps on dropping, especially in recent weeks, right? Bitcoin's going up, ETH Bitcoin going down. Same thing happened, last cycle, right? ETH Bitcoin was going down while Bitcoin's going up. But then when ETH Bitcoin bottomed, Bitcoin went up a little bit, right? It went up a little bit after that. But what really went up when ETH Bitcoin bottomed was ETH for a few weeks, right? If you overlay ETH onto the chart, ETH actually got a pretty nice rally after ETH Bitcoin finally bottomed, right? And it rallied, I guess, starting September 2nd. And if we just go look at Ethereum, it's hard to see it on this chart, but if you just go look at Ethereum, the week of September 2nd, 2019, that's right here, right? And you can see that when it bottomed, ETH then rallied from that low, right? It rallied almost 40%. And in that rally, it actually, went almost to the 20-week moving average. Well, today, it's above the 20-week moving average, right? And if that is the bottom for ETH Bitcoin, it's currently up only about 20%. Right? It's only up about 20%. But I guess the argument is this, right? If there's not a bid for the blue chip as significant as there has been for the last 3 years, right? If that bid diminishes in any way, then it could cause a drop in the broader market where Bitcoin dominance goes down, but Bitcoin drags down the rest of the market with it. Okay, again, it seems crazy. I'm right there with you, right? It doesn't seem like the most likely outcome, but I feel it's my duty to at least express the only way that ETH could actually go home. And then I started wondering, well, is there any precedent for this with the S&P 500? So I looked at it two separate ways, right? With the S&P, right? Is there any reason to think the S&P has topped anytime soon? And the reality is the answer is probably no, right? Because again, when the S&P gets moving like this, you're better off not fading it. And I say that as someone who all I do with the S&P is buy low expense ratio index funds, DCA them, and I forget about them. I don't worry about them. I don't really care what the market does. If the market were to drop tomorrow, I wouldn't panic sell, right? I would just buy more, right? That's what I do with the S&P. So I'm just looking at it, and I'm taking a closer look at it right now, mainly because I'm just trying to figure out, is there any way that ETH could still go home before the end of the year? And I'm having a hard time coming up with compelling reasons. I only found 2 reasons to potentially, maybe 3, to potentially be cautious, but again, not really great reasons. One of which is if you look at the S&P divided by M2, right? If you look at it divided by M2, this is divided by the money supply. What you'll notice is that the S&P has been on a absolutely amazing move for a really long period of time, right? And this move here started in October of 2022. And what I was looking at, I was like, okay, well, let's look at that level and see if that level has any relevance in history, right? Does it have any relevance in history? And so you take this support level for for the S&P divided by M2, and then you immediately see there's another support level at that same spot in December of 2018, right? So the S&P, basically found a low in December 2018 at this level, and then found a low in October of 2022 at that same level. You'll also notice that some of these tops by the S&P divided by M2 were very similar, right? One in February 2020, one in December of 2021, and then one in August 2023, sort of a brief pullback, and then it took it out. So I said, all right, well, let's just continue on and see if there's any other prior supports. The only other time that it's ever hit this level and then bounced off of it, in any obvious way, was all the way back over here in 1996. 1996. And the reason why that's interesting is because what ended up happening was from that level, the S&P divided by M2 rallied 73.4%, right? What the funny thing about it is that that's basically the level that the S&P divided by M2 is at right now, right? If you were just to go across the screen at that top, the S&P is almost there against M2, right? It's almost there. In fact, I have to imagine that if the S&P were to hit 6,000, it would be at that level. But the important thing about this is that this did not mark the top of the bull run, right? Yes, there was a nasty pullback, but it did not actually mark a top. So what I'm thinking is, if by some miracle ETH does go home, it would have to be due to a larger pullback in the markets. And that's not a thing I'm counting on, right? It's not really a thing I'm betting on. If it happens, I will happily buy the S&P if it were to drop back down here and, and then just forget about it again. But that I think that is essentially what would have to happen at this point. A very strong move to the downside by the broader market, then forcing people to sell off the riskier assets, not because they want to, but because they have to. So if the S&P moves up to 6,000 and then if it can't get through it and there's like a flash crash, then I guess that's where I would come in. And I think a lot of people, think about drops in the S&P, right? It's 50% or nothing, right? But a lot of the times the S&P drops, it's either 5% moves or 10% moves or 20% moves, right? Not 30 or 40 or 50. Yes, the dot-com crash was 50. Yes, the financial crisis was more than 50. But that's not the norm, right? At least not in recent years. So I suppose that is what would have to happen, right? Sort of a pullback, kind of basically where it pulled back to back then. I mean, if you look at it, it would basically be pulling back to that prior top by the S&P divided by M2, sort of back testing that level from July of 2023. But again, a lot of people lose a lot of money betting on markets to go down when the way to make money generally is just to DCA and forget about it and go live your life. So that's one way, right? Is if you look at the market through the lens of M2 and say, well, if there is any validity to sort of this resistance level flipping into support, and if the S&P does sell off here back down to this support, it would essentially be sort of the same thing as like the 1998 scenario. So then if ETH did actually go home, right? Let's imagine a scenario where ETH does go home and then it seemed like a great opportunity. A lot of people might say, well, hold on a second. Why is it a great opportunity if the market's just going to go down, right? I mean, if the S&P were to drop 20%, I don't imagine there'd be a bullish person on here, right? I think everyone would just be calling for Armageddon at that point. But if the S&P did drop 20% and ETH magically found its way down here by the end of the year, there would exist a scenario where that does end up being sort of like the best accumulation phase for ETH, where then it gets a strong move out of there if it were to follow what the S&P did back over here in 1998, where then it got a strong move out. And then the actual bear market recession didn't start for a couple years later, right? So that's one way it could happen. And then I was curious. I was like, well, was monetary policy at all the same back then? Because, monetary policy obviously plays a big role. One of the things I've learned a lot this cycle, and I mean, it really took me until the end of 2023 to really even think about it with any validity, which is my own mistake, was monetary policy should mostly just be used to look at higher risk assets against lower risk assets, right? So like altcoins against Bitcoin, or the Russell against the Nasdaq, or Rivian against Tesla, right? That's what I think monetary policy is the most useful tool for. And the reason I say that, right, is if you look at this chart over here, and we've talked about this a lot, right? Total 3 minus USDT divided by Bitcoin. If you look at this chart and you overlay interest rates, not interest rates, if you overlay net liquidity, what you'll notice is that as net liquidity drops, so too do high risk assets against low risk assets, right? So too do altcoins against Bitcoin, right? So as long as they're dropping, right? As long as net liquidity is dropping, all Bitcoin pairs generally are dropping too. If net liquidity were to start going up again, like it did over here in September 2019, right, that is what typically marks, the bottom for alt Bitcoin pairs, at least in the QT phase of the bull market. So that's why I think you have to look at it through the lens of monetary policy to sort of figure out what are high risk assets going to do against low risk assets. If you try to do the same thing for USD valuations, you're going to be sorely disappointed, because this is what happens. The jaws of liquidity open up. There's not a single person on this earth who can tell you with any confidence when they're ever going to clamp shut, right? Last cycle, obviously the jaws of liquidity opened a number of times, and eventually they did clamp shut. But as I said, as I've said for years now, no one knows right? Like when they're actually going to sort of clamp shut again. And you can see that happen a couple of times back then. We're not going to go through all of it, but you can see the jaws of liquidity opened, and then they clamp shut. And you can see they didn't really clamp shut until after QE began, right? So it might be premature to expect them to clamp shut as long as QE hasn't even started, right? So that's why you shouldn't use monetary policy to just tell you what USD valuations are going to do, because the jaws of liquidity can remain open for years before they ever clamp shut. And that's not really a way to become, to be a good investor, to just watch them for years, right? So going back to the broader market, and thinking, I guess, about the S&P divided by M2, is there any way for it to actually drop? Perhaps look at monetary policy, right? So let's take a look at interest rates back then. And I found like an interesting similarity, right? And again, it's easy to find because I'm looking for something to find, right? This is like a crap, my theory that I feel like I spent so hard on is now in jeopardy. Let me quickly find something to confirm my bias. It's more of like a desperate attempt, not something that I'm asking you to believe, to be completely honest, because I don't. But interestingly enough, during that drop in 1998, the Fed funds rate had actually been constant at 5.5% for some time. If you look at sort of these price label, well, I guess I'm looking at S&P 500 too. But yeah, if you look right here, you can see it's at 5.5%, and it was at 5.5% for a while. If we were to take a date range on here from when they hit that interest rate until when they started to cut, this was, let me switch over to months here. It was approximately 17 months, or maybe, yeah, about 17 months of a pause. And if you go look at it over here, it was less than that, right? It was less than that. From the start until they started to cut, it was only 12 months. But what's really interesting is, and I honestly, I hope this is not part of our future with monetary policy, but it's something that at least warrants our attention, is that the Fed funds rate was at 5.5%, and then they cut to 4.75% by the end of the year. And you can see that it was, it was sort of while while the Fed was cutting, that's where the S&P, I guess it started to happen just before it, but the S&P drop corresponded to the drop of interest rates from 5.5% to 4.75% by the end of the year, right? And you can see that they basically hit 5.5% or 4.75 before the end of the year of 1998. In November, in fact, right? It was November where the Fed funds rate got back to 4.75. And if you look at market expectations for this cycle, you can see that the market is essentially saying that the Fed's going to cut to 4.75%, in November, right? And I don't know if I'm probably not even going to get this video out before the next FOMC, because, I just released a video, and then tomorrow I'll probably just release a video, on the FOMC. I might put this one out first, but if I don't, I'll just put it out, the following day or something. But it's interesting, right? Because, you basically have a very similar setup where the Fed goes from 5.5% to 4.75% in November, and that's exactly what happened in 1998, where the Fed went from 5.5% to 4.75%. And when the S&P corrected, it was like a 20% drop. But the bull market wasn't over, right? There was still, another year or two left in it before it really, before we really got the actual recession. But I did think that was interesting, right? Interesting comparison. Again, it's a desperate comparison, and I'm not asking you to believe me because I don't believe me. But it's something that I'm almost, again, I'm sort of doing this for me at this point, not for you any longer. I want to know if I can look back at this time and say that I stuck it through no matter what, right? it's a strong theory. It's a or sorry, maybe strong's on the right word. I've been very vocal about it since March, and I would hate to sort of just throw in the towel and not at least, you know, uh, give a shred of evidence that it might still happen, right? And so this is that shred of evidence that it might still happen. And the only way it's going to happen is if the broader market drops, right? So I would just watch the broader market. If Bitcoin keeps on melting up, and if the S&P keeps on melting up, then ETH is probably not going home this year. And if ETH doesn't go home this year, then the theory is wrong. There's no, let me just wait until 2025 and see if it happens. It's just wrong. And it's fine being wrong. I convince myself of that a lot. I try to convince other people that it's fine being wrong. And it makes sense to hedge, you know? It makes sense to say, you know what? This view could be wrong, and I don't want to I don't want to be left just sitting here waiting for something for it to happen while ETH just runs new all-time highs, right? So it certainly makes sense to hedge, and I have more ETH now than I've had in years because ETH Bitcoin has finally gone, to around 0.035 or so. So then, I guess that's the somewhat loose evidence, that it might occur. The other thing is there is a pattern, and it's something that it's why I said 6 to 9 months and not just 6 months, right? We talked a lot about, this consolidation period before Bitcoin breaks out to new all-time highs would last 6 to 9 months. And the reason I said 6 months was because this was how long it took for Bitcoin to break out in 2019. Right, going into 2020, it took 6 months. That's why I said 6 to 9 months. And you can see that it took about the same amount of time to break out. And so I think it's foolish, right? I think it's foolish to assume that this pattern has to play out, right? Where it breaks out and then drops, right? Like sort of breaks out, everyone's like 100K by the end of the year, and then it just drops, and everyone's like, what the hell is happening? It's probably foolish to call for that, especially because we know that this drop over here was caused by a spike in the unemployment rate to 10%, right? And I don't think anyone here is forecasting the unemployment rate to go to 10% next month. So might be foolish to call for that. But what is interesting is back in 1998, the S&P kind of had sort of a similar structure. Look at the weekly time frame for the S&P in 1998. What you'll see is that there was this, and I know this doesn't look like a lot, but these are weekly candles going through months, right? This is starting in March, which is actually coincidentally when Bitcoin started putting in lower highs for a while, and then it just kept on putting in lower high, lower high, lower high, and then it broke out in June, so it didn't take as long. But what you'll notice is that you had a series of lower highs, and then there was a breakout that lasted about a month. And then the collapse occurred. And then everyone thought probably the bull market was over. And then it just went right back up. You see that? So basically the idea of like, you have this bull flag. It breaks out. I guess you could even, if you draw the parallel channel here, I guess it doesn't really work that. I mean, you get the idea, right? So it breaks out of the flag and then it falls. Bitcoin did the same thing in 2020, right? Where it's in this channel. It then breaks out, and then eventually just sort of falls back beneath it. And same thing, right? I mean, you have sort of this channel, Bitcoin's breaking out. The only way ETH goes home is if Bitcoin falls back into the channel, right? That's the only way. In my opinion. I guess there's technically a way where if Bitcoin were to just fall back up to the top of the channel, maybe that would be enough to send ETH home. But realistically speaking, right? Realistically speaking, if Bitcoin's up here, it just seems unlikely that ETH is at home. Right? I think Bitcoin would have to be down here. If Bitcoin were down there, then by all means, right? I think it would happen. But again, I don't really think it makes sense to fade the seasonal view of Bitcoin, right? I don't want to be the one just sort of offloading all my Bitcoin because I'm worried that some theoretical crash could occur to sort of confirm a theory that doesn't even have to be correct. So I'm putting this out there as an academic exercise to say, if by the end of the year we look back and ETH did go home, this is probably why. If it doesn't, then please forget I mentioned any of this, right? Or forgive me for expressing any type of, contrarian view on this stuff. But yeah, I guess that's the idea, right? If this is sort of these if it's sort of just like a false breakout. But, there's sort of the heart part of me says, how could it be, right? I mean, you know, you have all these flows coming in through the spot ETFs. You have, obviously, they've talked about a strategic Bitcoin reserve that'll theoretically be happening. So it just seems like the only way for it to happen is if there's a broader drop in the market, right? So what could actually happen between now and the end of the year that would catalyze such a move? The only thing I can think of is the uninversion of the yield curve caused by a rising unemployment rate, right? That's the only thing I can really think of at this point. Because, if you look at the unemployment rate, the only reason Bitcoin was putting in the lower highs to begin with, arguably, if you go back over to Bitcoin, the only reason it was putting in the lower highs to begin with was because of the unemployment rate. And look, we've waited, half a year now for Bitcoin to break out. I'm not going to go fade it, right? But the only way for Bitcoin to get a big move back down would be if the unemployment rate were to shoot back up, right? Like if the unemployment rate were to come back up here in December, let's say to 4.4% or 4.5%, if it made a big jump like that next month, then maybe the market's getting ahead of itself. And then it's like, oh crap, this breakout isn't actually legit. We need to go back down and check back in, make sure that the labor market is actually holding up. That's the only thing I can think of that would cause it, is a big move up by the unemployment rate. If that doesn't happen, then ETH probably doesn't go home. And of course, there's obviously the inversion, the uninversion of the 3-month and the 10-year yield. Right? I mean, if you go look at the macro side of things, if you look at Treasury yield spreads, the 3-month and the 10-year yield, they're almost uninverted at this point, right? Almost. It wouldn't take much longer. It's not updated for today, I don't think yet, but it wouldn't take much longer if we go actually get the most recent data, just so you have it up on your screen. If you take the 10-year yield and you subtract out the 3-month, sorry, I need to subtract out the 3-month yield, you'll see they're only 13.3 basis points from uninverting, right? And if you overlay recessions onto the chart, right, it's during that uninversion or right after it that causes the drop in the market, right? Where the uninversion process actually takes place. That's where you actually get your recessions. So that's the only thing I can really think of, is if next month the unemployment rate comes in really hot. But what I said previously was that going into this month, if the unemployment rate comes in low, then Bitcoin would likely break out. And it has, and I'm glad. I stand by that view, right? I mean, if the unemployment rate came in low, it made sense for Bitcoin to break out, because the only reason Bitcoin was going down at all in the first place was because the unemployment rate had been going up earlier this year. If you look at the unemployment rate, remember, the lower highs by Bitcoin began when the unemployment rate started to really move up, right? But now that the unemployment rate had been moving down, I mean, you can't expect Bitcoin to wait around forever, right? It's not just going to sit by and be like, all right, we'll just wait for the unemployment rate to go up. No, the market needs a reason to go down. It doesn't need a reason to go up. If the market, if things are okay and the unemployment rate's not going up, then Bitcoin goes up, generally speaking. Because throughout the last several years, last decade, the unemployment rate has trended down and Bitcoin has trended up. Right? So that's what I'm looking at, right? In order for ETH to go home, it's funny because this whole video is about ETH going home, but I'm not really looking at ETH. And the reason is because I don't think that ETH goes home because of anything on the ETH chart. It has to come from somewhere else at this point. So that's the only way, right? If there's a larger sell-off in the broader market, then I guess it could happen. If there's not, and the unemployment rate just stays down here next month, then probably not. The other thing to consider is the long end of the yield curve. If you look at say the 10-year yield, the 10-year yield has this way of, once it so let me show you this, right? So the last time it was putting in sort of these lower highs, and then it broke through, was in July of 2023. And what happened is it broke through and then came back, tested as support. And after it tested it as support, that's what marked the top for the S&P. The local top, not like a major top, just a local top before about a 10% drop, right? If you overlay the S&P, you can see that the S&P was going up. And then even though the 10-year yield was going up, right? The 10-year yield was going up, the S&P was going up. But then the 10-year yield broke out, came back down, retested this, held it as support, and when it held it as support and started moving up again, that's when the S&P corrected, right? So if that were to happen again, if the 10-year yield were to break out, come back down, hold it as support, let's say it breaks out, let's say the S&P goes to say like 6,000, the 10-year yield tests this as support and then starts to move up again, and then people are like, oh crap, what's the 10-year yield doing, right? The Fed does not control the long end of the curve at all. I mean, their policy might affect it loosely, but I mean, the long end of the yield curve is more fixated on what's going on in the economy long term, not what the Fed's doing in the short term. So that I suppose would have to be the way, right? If the 10-year yield is breaking out and going back up to say 5%, right, by the end of the year, then maybe. And what's interesting is if you look at 2016, that's exactly what the 10-year yield did. Is that, and the reason I say 2016 is because, a lot of similarities, right? Trump became, was elected president. Cyclical ROI of Bitcoin is basically the same as it was in 2016 at this point. But if you look at the 10-year yield in Q4 of 2016, right, it absolutely just exploded upwards. And you can see the week of November 7th, right? So the election week, the 10-year yield went up, and then the following week, it continued to go up. And so that, I think, is the argument, is that if the 10-year yield doesn't top until December, like it did in 2016, then would that cause the S&P to falter in December? Remember, the drop by the S&P in 1998 was really short-lived, right? I mean, it was not a very long drop. I know some people have sort of compared it to 2022 at times, but it's not really 2022 because it started in like late July and it basically bottomed within a month. And yes, it swept the low a month after that, but the actual drop by the S&P occurred in like 1 month, right? 1 month. So I'm just wondering, right? What if in November, right? The markets hold up for a little while, and then December rolls around, unemployment rate prints, I don't know, 4.4, 4.5, and we get full uninversion of the yield curve. The S&P sells off. Everyone's like, oh crap, the recession's here. And then it turns out it's not yet here. And it's just sort of a scare before another move up. So that's how you could get a drop home by ETH, right? I'm thinking is my video frozen? Okay, there, I'm back. But that's how I suppose you could get that final drop. It's not going to come from the ETH chart at this point, I don't think. I mean, I'm not saying there's no analysis you can. I mean, I'm sure there's some analysis you could do on the ETH chart, right? Even you could look at it over here and say, well, I mean, that's going to be the resistance level until proven otherwise. But that, I think, is what you look at is, if it just kind of plays out like it has done a couple of times in the past, then yeah, there's still a chance that ETH could go home. Again, I know there's no way I can make this video and it come off as anything other than pathetic, which is why I'm trying to communicate to you that I've already started actively betting against it. But, I think for me, I have to make the video and just say there's a chance that happens, and I know it doesn't seem like the most likely outcome, and it's probably not, right? I don't want to go on to, I don't really want to go onto Twitter X and be like, this is gonna happen, but um, I have to at least put it out there, right? I don't feel like I would be doing the theory. I feel like I'd be doing the theory a disservice if I didn't at least mention these things. Um, so I think what I'll do is, I mean, I'm hedged. I'll keep some money set aside in case it does get that drop. And if it does, I mean, if it does get that drop, I would be very happy. But at this point, I know that, like, sometimes when I get several things right in a row, like this year, I feel like I've done a pretty good job, much better than last year. Um, a lot of times when that happens, right, when I start getting things right, then the market is like, no, you got to be really wrong about something, so that we can humble you and put you back in your place. So that's kind of where I am right now. We'll see what happens with ETH. I mean, honestly, I'm more interested in ETH Bitcoin than ETH USD because I more so think of my portfolio in terms of Sats and not in terms of US dollars. But I do know that a lot of people do care about the USD valuation, and so the only way that I really see it happening is if the broader market drops. And if the broader market drops, then the Satoshi valuation of ETH could still be somewhat preserved. I think it might be a little bit premature to, like, definitely say the bottom is in for ETH Bitcoin because QE still hasn't actually started yet, and last cycle ETH Bitcoin didn't bottom until QE. But who knows? I mean, maybe the Fed will pivot to QE like tomorrow, or I guess maybe it won't be tomorrow because by the time I publish this video, the FOMC will already be behind us. But maybe they'll pivot to QE sometime this year. Could be the November meeting. But if it's not the November meeting, perhaps December. We'll see. But until that time, it might be a little premature to call the bottom on it. But the reason why I think it's at least somewhat interesting here is because ETH Bitcoin, this is a pretty aggressive move up, and this is what you want to see, right? The main thing it needs to do now is it needs to get back above this level and then get back above the 50-day moving average. If it can do that, then I'd say it's got a lot going for it. If it can actually do that. So those are my views. I guess that is my final defense of ETH ever going home. For at least a time frame that is reasonable, right? I can't hold on to it. If it doesn't happen this year, it doesn't mean it's not going to ever happen. It just means that what's the point of saying it, right? It's just, I'm wrong, move on with my life rather than hold on to a dead theory. So that's where I am right now, guys. We'll see what happens with Ethereum, and we'll see if it actually comes home or if it remains if there's no way home. I guess we'll see if there's no way home. Thank you guys for tuning in. Subscribe, give it a thumbs up. We do have the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.